Welcome everyone to Vested Interests. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thanks to those who have subscribed to the channel. I really do appreciate it. If you haven't done so, take a second to hit that subscribe button, hit the notification bell so you're notified whenever we put out any new videos. I do stock pick of the day videos throughout the week. I do a portfolio update on every Sunday. And then I also do some other topics, financial opinions, financial stuff financially that I have read, books I've read, or my opinions on financial topics as well. So again, hit that notification bell so you're notified whenever we put out any new videos. If you're new to the channel and stopping by for the first time, on this channel we focus on a passive income investing strategy, buying stocks in good companies that pay dividends. You know, it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. It really boils down to consistently investing, buying dividend growth stocks in growing companies with positive cash flow that covers the dividends, and companies that return a high yield on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks within the portfolio on a minimum of a biweekly basis every 2 weeks when I get paid. But I also do large purchases as well if I have extra funds or get a bonus or do a side job, something like that. I pretty much invest every week and cover those investments. That's what this portfolio update is about, my weekly purchases. I cover all my investments into the portfolio on this channel. I do not have a paid Patreon account, nor do I intend to ever have one. We all have enough to pay for, so it's free to see what I'm investing in. But if you'd like to help the channel, dropping a comment down below, liking the videos, and subscribing helps the channel out tremendously. It helps with the YouTube algorithms, and it helps to spread the message and get this small channel out to more people. If you'd like to help in other ways, I do have a link to a Webull account down below. So if you're looking to start your own investing account, if you use that link, you'll get some free stocks. When you sign up and deposit funds into the account, I'll get some free stocks as well. It does help me out. You don't have to use it, but it is a way to help out the channel. I don't really cover what I'm investing in Webull on this channel. It's more speculative in nature, and I don't want to lead anyone into investing in speculative stocks, so I stick to my dividend growth stocks on this channel. There's much higher risk in speculative stocks, and a lot of them don't pay dividends, so you won't get that passive cash flow, that passive income. In today's video, we will be covering the most recent portfolio activity as of September 10th. And as you can see, this week we added $1,317 to the portfolio. So let's jump right into the video. As you can see here, I have added a new slide. We are going to also cover the dividends reinvested on a weekly basis. We did have $53.99 in dividends reinvested into the portfolio on July 1st. As you can see here, Brookfield Infrastructure Partners paid us $15.81 in dividends. We did sell out of Brookfield Partners, so even though we sold after the ex-dividend date. So this was the last dividends paid out by Brookfield Infrastructure Partners. And what you'll see here, a little different than the other two that paid out on the first, this did not get reinvested. So this would just become cash and capital that I can use in the portfolio. It just goes in there in the form of cash. It does not automatically reinvest like Coca-Cola would have. So as you can see here, Huntington Bank shares, for example, paid $24.71, but then it went right back in and automatically the cash movement bought 2.0735 shares, right? Same thing with Coca-Cola. They paid a dividend of $13.47, but it went right back in cash movement, reinvested, and bought 0.21136 shares. So they pay a dividend and then basically go right back in to the stocks that paid them out and buy more shares. So Huntington Bank, I didn't purchase any shares of Huntington Bank this week, but the dividends reinvested did, 2.0735 shares. And same thing, I didn't purchase any shares of Coca-Cola this week, but the dividends that were reinvested by DRIP, which stands for Dividend Reinvestment Plan, the DRIP automatically buys shares of Coca-Cola or any stock whenever they pay out the dividends. So I'll look at those every week so you can understand how the snowball grows, right? It's not only the funds that I put in, new funds that I put in every week, it's also the dividends that go to work back in the portfolio buying shares, even if I don't buy shares of the company. When the dividends are paid out, they automatically buy shares of whatever company paid them. So on July 1st, Huntington Bank shares, Coca-Cola, and Brookfield Infrastructure Partners. Again, even though I don't own Brookfield Infrastructure Partners anymore, I owned them after the ex-dividend date, so they still owed me the dividends for that. Now for the new purchases of capital that I added $1,317.22 of new funds into the portfolio, and with those funds on July 5th, I bought 25 more shares of Zim Integrated Shipping. It is a shipping company, ticker ZIM, in the industrial sector. I picked those up for $42.04 per share, spending $1,050.89 to pick up those 25 shares. I added 3 shares of Enbridge Inc., ticker EMB. This is in the energy sector at $40.46 per share. I added 2 more shares of Enterprise Product Partners, ticker EPD, at $23.30, and that is also in the energy sector. I picked up 3 shares of Omega Healthcare Investors, ticker OHI, at $28.29. This is a REIT, which stands for Real Estate Investment Trust. And this particular REIT owns elderly home care facilities. So if you think healthcare facilities that take care of the elderly are going to be around, this might be a good one to watch. They also have a very nice dividend, as well as EPD and ENB. They are higher than normal. Zim Integrated we covered before. I have a significant stake in this currently, but it is a more speculative in nature. But at these prices, and I was buying Zim at $84 per share, $82 per share, somewhere in there. I'd have to go back and look exactly. It has been cut in half, so I consider it extremely cheap. Typically, this is one I would not cover. It was originally bought in my Webull account, but as it's come down, I have decided to add some to my permanent dividend account. So these 25 shares will remain in the overall dividend account at $42.04. And lastly, we picked up 1 more share of Vale, ticker VALE, at $13.49. This is a mining company out of Brazil. They mine nickel and other metals, and they just signed a big deal with Tesla to provide a lot of their metals for their batteries. Vale is also out of the material sector. So we've got some energy sector, a REIT, industrial sector, and material sector added to the portfolio this week. So again, $1,317.22 added to the portfolio. Let's take a look at the overall portfolio performance. So as you can see, portfolio update as of the end of the week, and this will be July 10th is when this video will come out. So the total value of the portfolio sits at $116,877. The dividend yield sits at 4.778%. And the most important part, regardless of what the market is doing, regardless of whether it's up, down, floating sideways, or completely volatile like it is right now, up and down one day to the next, the annual dividend income continues to grow. It currently sits at $5,584.56. This is purely passive income. I've done nothing more than buy and hold the shares and let the dividend payouts reinvest into the portfolio. At some point, we will look at this annual dividend income and either turn off the drip and let it buy some real estate, which is probably the plan, or let it just be passive income that I use to live off of to pay the bills. My plan really is to get this to about $12,000 per share, or per year, I mean, and then we'll probably turn off the drip, look to take out some loans against the portfolio in total, and then buy some real estate, which will become passive income in the form of rent. So rental properties is what I'm looking to buy with this. But until I get the portfolio to a significant position, probably 250,000 or more, I will continue to just leave the drip on and let the dividends reinvest. As we saw on the first slide, they will continue to buy shares of other companies within the portfolio, and that will help the snowball to grow larger, faster. And then, like I said, at some point, I'm assuming about $1,000 a month. At that point, I can probably go to my bank and say, hey, what type of loan will you give me against the portfolio that I can look at buying real estate? And I'm probably looking at, time frame wise, next year. I believe the real estate market is going to continue to decrease or decline. Prices should come down as interest rates go up. And again, I bought my first house when mortgage interest rates were around 7 to 8%. So really where it's at currently, 4 to 5%, is not that big of a deal to me. And I would not be opposed to buying real estate with a mortgage rate around 7% like I did back in early 2000s, 2003. So long as it made sense in the the rent paid for the mortgage plus a little bit of passive income in my pocket. When I start doing that, I'll probably cover that as well on this particular channel, because again, passive income is the name of the game, and there's more than just dividends to get that. But right now, the real estate market is just a little overvalued, so we are going to focus on dividend growth stocks that I feel are undervalued. Well, that is about it. That wraps it up. Let me know what you purchased this week. Always interested to know what you guys are doing with your portfolio. Oh, well, before we go, let's run through the actual positions within the portfolio, the different sectors. This is also important. I like to be diversified within the different sectors. That way, if you're down in one, for example, technology seems to be down right now, but perhaps utilities or energy, which it is, are up at the time. So it helps to offset some of those losses, and you don't have the huge fluctuations you see on some YouTube channels where guys are down 50-60% because they have most of their positions in tech stocks. I like to be pretty diversified. Again, if healthcare is up, maybe materials are down, or if industrials are down, maybe consumer staples are up, or if consumer discretionary is up because things are going great, maybe materials and utilities go down, or if REITs and real estate is up, another sector might be down, so they help offset each other whenever you do that. Again, communication sector is at 9.58%, consumer discretionary sitting at 3.60%, consumer staples sitting at 8.32%, energy is sitting at 9.38%, financials sitting at 11.8%, healthcare is sitting at 10.29%, industrials at 12.87%, technology is sitting at 12.65%, materials sitting at 6.35%, utilities at 1.68%, really low on the utilities, and actually consumer discretionary as well. Those are two sectors that I'd like to add to. This one is really down. A lot of consumer discretionary is really down, so I am seeing some value. I might start looking there. Utility is kind of up along with energy right now, so not really looking to add there unless I see some pullbacks, which we did this week with EPD and EMB. So, and the last one, REITs and real estate sitting at 13.47%. Again, seeing some value in REITs and real estate as well. So I've been adding there in other weeks if you've been paying attention to the videos. I do not have anything currently in ETFs, but there are some emerging market ETFs I wouldn't mind getting into. But there's just so many other positions right now within the portfolio, existing positions I'd like to build out and continue to add. Now, with that, I think we've wrapped up the video. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what's going on with your portfolio. Let me know what positions you added to or what you're watching. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics. Constructive criticism, welcome as well. Drop that all down below. Again, I do personally read and respond to comments. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. I hope you're having a great weekend. And let me know what stocks you're looking at in the week coming up. Thanks, guys. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.